go live yet.
Oh. What did you name this? What did you name this episode?
First Bitcoin company to enter the S&P 500.
First Bitcoin
Feel
company.
like
Not the first company with Bitcoin on the balance sheet in the S&P 500. That would be Tesla, correct?
yeah, and also Coinbase is in the S&P 500, but they're not a Bitcoin company.
No, they're not. They're not.
Oh, I forgot to add that to the list. I'll add that to the list now.
It's very, very not based of you.
Yeah, you knew exactly what I was talking about.
Let me see.
Let's start with Odell clawing back his Mempool space, his Mempool's never clearing again bets. I want another bet against Marty this week.
I thought, actually, I didn't think. You reminded me of it yesterday. And I reminded you of it nonchalantly and unintentionally.
Since my wife told me not to make any more Mempool bets, I've been on a winning streak. So shout out her.
I think you've taken 600,000 sats from me this month.
Yep. Why don't you tell the freaks what the bet was? Remind them what the bet was.
It was Bitfinex would have the confiscated coins that were taken from, no, it wasn't loaded. It was Razokhan and her boyfriend, or were they husband and wife? Husband
and wife. Yeah.
Still don't believe that story. Still find it hard to believe that those were the two that hacked.
I don't think so. I believe it.
100,000 Bitcoin from 160,000.
You got to remember what the situation was at the time. Bitfinex was trying to get around KYC banking regulations. And so they were running a novel multi-sig setup for every user that effectively meant that all of the Bitcoin was in hot wallets. So it was between them and BitGo was automatically signing everything. Otherwise, the website would be complete shit and not function well. And so the theory is, or at least this is the official story, is that Razokhan social engineered one of the keys, and then the other key was auto signing, and she drained the wallets of all the customers of 100,000 Bitcoin. That makes complete sense to me. Like, they were not running. There's a reason why every major exchange since Gox that hasn't gone down and hasn't gotten hacked runs a hot cold setup where the majority of funds are in cold storage and can't be moved from an internet connected device. And it's because if you get hacked, you only want the hot wallet to get drained. But in Bitfinex's case, everything was a hot wallet, which I understand why they did it. It was a really bad regulatory time. Like, the new people don't realize how bad it was. I mean, it was really bad even 2 years ago. So,
and the setup was such that BitGo would essentially just blindly sign whatever came their way, right? Yeah.
And then both parties blamed the other one when it happened. They were probably both at fault, to be honest. But anyway, it does seem like, so Tether Bitfinex is the same parent company. It does seem like they're going to get their Bitcoin back. Marty was a little bit too excited about the DOJ releasing the Bitcoin. So they did not get it back by July 16th. So I won the bet. I will say that, I mean, remember when we had the Silk Road guy that got arrested? This is like the same situation for a company.
John Doe.
They ended up releasing like their own token that people could speculate on, and if people waited, they would have gotten 1-to-1 of the hacked funds back. Most people didn't wait, so they actually paid out most of the funds, probably at a 70%, 80% discount. So made their customers quote unquote whole, put it behind them, and then they got a forced hodl. And now they're going to have, if this money gets returned to them, they'll have one of the largest Bitcoin treasuries in the world, because that's not customer money anymore. That's Bitfinex money.
And that is currently worth, it's 119,000. I believe the government recovered 114,000.
I think it might have been less. I thought it was closer. It was closer to 100,000 is what was recovered.
$96,000 using the opportunity cost app, browser extension, Bitcoin to fiat converter right now. That is $11,438,112,000. Just 11 billion bump.
Forced hodl.
Yeah.
And just to remind freaks, the way they caught them too is actually
A
quite
lesson.
believable. Which is they were slowly cashing out with gift cards, and they made a mistake. They like linked to their identity, and that go on.
Weren't they securing their keys in the Google Cloud too?
I mean, I think at the end of the day, they got arrested, and when they got arrested, they handed over the keys. So I don't know how they stored it really matters that much. I think when the U.S. government throws the book at you and puts a gun to your head, you try and get leniency. And I mean, she clearly talked like crazy because she's not behind bars right now. So
Is her husband behind bars? Like I'm
I
still.
don't know.
What's his story? We only
She's been like
hear
jumping
about her.
around at like conferences and shit. I mean, if he's smart, he's just laying low, which is what she should be doing. But she, wants to be the richest rapper of all time and is chasing that high.
Do you remember? Apparently, she was at the Hot Style Takeover in Nashville.
Yeah, I mean, we didn't invite her.
No,
I
just showed up.
not a ride or die. But I just want to yes, you can use Bitcoin privately. Yes, most of chain surveillance, chain analysis is like hocus pocus bullshit. At the end of the day, they're doing probability analysis, but I think it's important for people to realize that the Bitcoin blockchain is forever. It will outlast all of us. And so if you make a mistake on chain that links your identity to you and your transaction history to you, that could be used against you years in the future. Like that doesn't require active surveillance. That can be passive surveillance. You just check the chain afterwards, match it with data externally from the chain. And that's why using Bitcoin privately is incredibly high stakes. And we definitely need better tools in that regard. Freaks, especially to the ride or dies, it looks like the Nostr stream is down again. I know Kieran upgraded his router and has been actively trying to combat this DDoS. Um, he disagrees with me, but I think it's someone who doesn't like us or doesn't like me specifically because everyone likes Marty. Because the DDoSs usually start right when I announce a dispatch or an RHR. So maybe I shouldn't announce it going forward. But also, that's kind of cool that we're getting actively attacked. They're trying to stop the signal. That's why we also stream to YouTube, X, and Twitch. And all recordings are posted to Nostr after the fact, which are much harder to stop and very easy to verify. I do think that Nostr long-term video on Nostr and streaming on Nostr and broadcasting after the fact on Nostr, whether that's audio or video, will be a massive, massive use case. And just to tease the freaks a little bit, we've been cooking something up at Primal. So in the next few weeks, video streaming and all sorts of media broadcasting, live shows and whatnot should be a key tenet of the Primal mobile apps. And you'll just be able to open the mobile app and join our live shows. So I'm pretty excited about that.
I mean, let's do business on air. We were talking about it before we hit record. Competing with YouTube and the social media platforms. That's, I think, one thing that we're going to need to figure out: server infrastructure, right?
Yeah, I mean, it's expensive as hell. And all the incumbents have resorted to algorithmic manipulation, data surveillance for ad sales, and basically treating all users as fucking cattle. So trying to do it in a ethically profitable way will be the most difficult path. But I think we can do it, and I think someone has to do it. And it's more effective to compete than to complain. So that's what we're going to do. And I will just say that at Primal specifically, we are very focused on being interoperable with the rest of the Nostr ecosystem. The entire stack is false. You don't need to use Primal to use Nostr and interact with any user that is using Primal. All of our subscription packages do not change like your exposure or reach on Primal. That is a red line we will never cross. They're just value-added services that are added on top. I mean, I think that's one of the real predatory aspects of the blue check program on Twitter, is that if you pay, you get more reach. And if you verify your identity, you get more reach. And so that's why people feel compelled to do it. We see similar on YouTube with enabling ad monetization. If you enable Google's shitty ads, you get more reach. If you do clickbait, you get more reach. So trying to break those broken incentives is incredibly important to us. And whatever we build on the streaming side will be cross-compatible with things that are coming out of Zapstream and Fountain and whatnot. So very excited about that. And the grind continues.
It's in. Let's pull it up. Pull up. Did you put the Coinbase tweet in there too? Because that I know we were both sent out notes on Primal
It's
about
the
this.
second to last. It's the second to last link. I edited it in Signal, Logan.
Yeah. So Coinbase. It's hard. It's so complex. Not complex. Complicated. The setup. So you have Coinbase, which is launch base, which is Ethereum layer 2. And then on base, people are building social networks and other applications, and they're trying.
Well, there's
to
another middle there too, right? So Coinbase launched their proprietary shit chain that sits on top of Ethereum called Base. And now they're releasing the Base app that is on top of Base. And this is the Base app.
And it's being marketed as an everything app. They released it in the App Store. They immediately had analysts on CNBC basically touting the party line of this is incredibly innovative. It's going to bring the WeChat, Alipay, everything app style to the United States. Coinbase is beating X to the market here. And I think it's important to recognize it's being marketed as this decentralized sort of open system.
Web3
that is going to make sure that the internet is sufficiently distributed and content creation is easily monetized and all that, blah, blah, blah. But it's decentralized in name only, Dino here. Because you have...
Yeah, I mean, yeah, go on.
You have many points of sort of centralized third-party risk throughout this whole
All
stack.
the way down.
Yeah.
I mean, they have a Zaps competitor built into it that uses USDC, which they're a major stakeholder in USDC, which is their USD token competitor to Tether. So they're not using Bitcoin for that. They've built in shitcoin trading and a shitcoin wallet. I don't think you'll even be able to hold Bitcoin. Historically, we've seen that the only way that Coinbase builds self-custody, quote unquote, self-custody tools for Bitcoin is if you used wrapped Bitcoin. And I say quote unquote self-custody because if your chain is centralized, it's impossible to do self-custody or cold storage because you're trusting a third party no matter what. Very few people realize that it's impossible to self-custody Tron or Solana, which is, part of the reason these things are shitcoins in the first place. But they are over the target, I think, on a lot of things. Built-in encrypted chat, new social experiences. I think the social gaming aspect is very big and very viral, particularly with money involved as well. People like betting. People like putting skin in the game and having stake there. And all of these things, I think, show that Nostr is over the target. Because with Nostr, we can do this in an open and permissionless way without a shitcoin, with Bitcoin integrated. And we have a vibrant, organic developer community that's building out all of these tools rather than this top-down approach. So in that regard, I think it's a real validation of what we've been building over at Nostr. when you see a massively valued huge megacorp that's traded in the S&P 500 launch something that's attempting to offer a lot of the similar experiences, I think is a big validation.
Yeah. That CNBC equities analyst, it seems like Coinbase has been following the way Nostr has been marketed over the last 3 years and just pulled everything from how Nostr's being positioned. Be like, it's like the take the ball meme. Like, this is mine now. Like, this is what we're doing. But
Yeah,
Logan,
can we pull up that video first? Was it primal.net/Marty Bent?
Just Marty, I think.
Slash Marty. Primal.net/Marty. By the way, freaks, all of our best way to follow RHR is primal.net/RHR. All of our episodes are posted there. You can verify they haven't been changed. Marty's primal.net/Marty. I'm primal.net/Odell. TFTC is primal.net/TFTC. RHR is primal.net/RHR. I already said that. Dispatch is primal.net/Citadel.
Is this what you're
Okay,
talking about?
here's
No,
the
no, just
video
go
here. I
down a
sent you the link.
Just go down a little bit. All right, the link works.
There you go.
Their wallet app with the Base app. So it's a complete rebrand, a full replacement. It's sort of an everything app, they're calling it, which I think we can think of as more of a super app, something comparable to WeChat in China, which you and I were just talking about. This kind of super app idea has been the holy grail of fintech for a very long time. So really interesting to see what Coinbase does with it here. And they're really putting the message out toward content creators because this is going to be a Web3 version of a super app. So they want to get that decentralization angle in there for creators. It is interesting to see what Coinbase does with the decentralized angle.
Just restarting.
Because they're trying to get into this new
yeah, it's. Oh, I thought it ended. Did that like loop?
No, it
it's
doesn't
only
loop.
halfway through.
She just repeats herself. It's like AI slop coming out of a human.
Let's dig into this a little bit, because I see somebody in the chat saying it's 2017 all over again, Web 3.0 puke. Like, it is crazy that this area of the crypto market hasn't gotten this. Logan, pull up the tweet I put in right above Matt's last message. But like, this guy, I don't want to like be a hater or anything, but this guy launched like a music NFT platform where you can put your songs on chain last cycle. Now he's back this cycle really pushing Base and Zora specifically, which is a platform on Base that allows you to launch your creator coin and turn posting into earning. And let's just read the tweet. As more people make coins, the more normal it gets. When you join Zora, you automatically have a coin for your profile. When you post on Base app, you make new coins tied to that profile. It feels weird at first, but then you realize it's just a way for people to trade the popularity of your post and profile, and you get paid from posting. There's no expectation of utility, access, perks, etc., etc. Make good content, your profile will be worth more. It's that simple. And it's like, it's something, it falls back to like first principles that we've described on the show many times in the past. Like, the crypto people think that they're competing with Bitcoin on tech features when they're competing on monetary properties. And just reading that tweet, like the fact that the people in this part, I don't even like align it to our industry, but in the crypto industry, can't recognize just like the double coincidence of once problem that they're creating by unleashing all these tokens. Like, they're positioning Zora and Base app and the social media Farcast or whatever it may be as a way to like tokenize your content and yourself and your reputation and monetize it. And it's going to turn into exactly what Pump.Fun has, where it's just like you completely dilute the supply of all the tokens. And so you have this game of hot potato where there's no sort of uh, uniform currency to monetize all this stuff. So it's automatically going to be worthless, especially as more people come onto these networks. And we've been saying this for years. Like, Web 3.0 as a concept is actually good. It's terrible that the meme has been really driven by crypto, but Web 3.0 is combining open source protocols like RSS like Nostr, now like chat protocols like BitChat, whatever it may be, with Bitcoin. Like you don't go and create an individual token for an individual creator, an individual post. Like you're just going to completely dilute the market of those tokens, and they're going to be worthless at the end of the day.
Logan, can you press the Grok button and ask Grok if his take is retarded?
What's the Grok button?
On the top of the tweet. Not your take. The guy who, by the way, I loved. I thought you did put a good voice to the tweet. You should do some audiobooks. I think you'd be a good audiobook voice.
Yeah, I'll take it.
I can tell you've read a lot of stories to your sons.
Yertle the turtle, the marvelous.
I struggle with this, right? Because I think some people actually are just clueless, which is amazing. But I do think most of them realize that there's no long-term staying power for this stuff. They just are in it for the grift because they can make a lot of money in the short term on the grift and the hype. And they don't really care. And there's not really that many repercussions. Like the only real repercussion is reputation repercussion. And we've seen time and time again that their reputation really doesn't get hit after years of grifting. I mean, this to me sounds similar to BitClout, but Breedlove has one of the most listened to podcasts in the industry right now still, even after the whole BitClout incident and him not really ever taking personal responsibility over it. There's zero repercussions. And as a result, you just got to follow the incentives. So I think it's probably a mix. There are people that are clueless, but most aren't. And the only real way to mitigate this stuff and reduce the impact of this stuff and reduce the amount of retail that gets absolutely wrecked by it is to outcompete them and just push them into obsolescence, right? Just make it just so obviously inferior that most people won't use it.
I want to add a bit of nuance here. I think the key sort of context to that is outcompete them in the long term, because in the short term, it's going to seem like Zora and Base App or whatever the hell it is, Base is outcompeting Nostr, and what's happening with what I would argue is the right way to build these systems. In the short term, the equities analysts are going to be in CNBC. This is the next big everything app. It's going to work. But ultimately, just due to the complicated nature of the setup, the layers of third-party risk that are introduced throughout. And I think ultimately what's going to happen is people are going to be posting content, and at some point down the road, the stable coins are going to get pressure like, hey, you can't let this guy monetize this type of content. It's wrong think, and they can't be monetizing it. I think that'll happen ultimately. And I think just due to the complex nature, like you have to start on Coinbase, you have to move your Bitcoin to wrapped USD token, whatever.
It's
then you have to bridge
insane.
it over, and then if you want to like actually realize the sort of value of those tokens they've accrued there, you got to bridge it back and sell them. It's completely complicated and complex unnecessarily. The point being, don't get disillusioned and sort of disheartened in the short to medium term when it seems like these protocols are outcompeting things like Nostr in Bitcoin. We've been around the block a few times now, many cycles. This is nothing new. It's going to get a lot of hype. Some of the associated tokens will probably pump a lot. A lot of the creators posting on Zora and other applications on Base will be sharing screenshots of them making what seems to be a lot of money. But at the end of the day, again, due to the dilution effect and the complexity, the complicated nature of these systems, like it'll ultimately fail and won't be able to survive under its own weight of complicated Rube Goldberg machine.
Eyes on the prize, focus on the signal, grind it out. And to be clear, you'll only see, when it comes to shitcoin trading, you'll only see the winners posted on socials. The overwhelming majority of people will get wrecked financially. They might have fun while getting poor, but they will get wrecked. And that actually goes for Bitcoin trading too. Like most people that try and trade and time Bitcoin will get wrecked as well. But it's definitely more severe in shitcoin land because those things trend to zero in Bitcoin terms. And I mean, if anyone's pulled up an ETH BTC chart lately, you just really start to see the grift for what it is, because they're all excited. It's amazing to me that these Ethereum promoters are still getting invited onto CNBC after a dead cat bounce of just years of just fucking carnage. It's so far away from all-time high in Bitcoin terms. It's not even fucking funny.
Logan, pull up the John Arnold tweet from our chat. I mean, there's a perfect explanation. Blow it up if you can. But it's like John Arnold's quote tweeting somebody who's complaining that Bitcoin's down 1% and alts are nuking like World War III just started. So tired of the shit. It's like, yeah, we've been telling you like for years. They're high beta plays to the upside and downside of Bitcoin, and most of them, all of them, don't have any long-standing like value, particularly as it pertains to their worth against Bitcoin. There is another life is possible, brother. You can just stop trying to play the grift of crypto and accept that Bitcoin is the best money for the digital age and begin building around that. And that's one of the most frustrating parts, particularly as we've been doing the show for 7 years, as we've been raising money and deploying capital into the Bitcoin ecosystem. It's like, imagine how far we would be if these people who claim to really be in it for the tech and the innovation and trying to separate money and state and making sure that people have access to freedom technologies in the future actually poured all their attention and capital into building around Bitcoin in the correct way and like understanding that this is going to be a very long-term build out. Rome wasn't built in a day. Bitcoin's not going to be built in a day. These systems like Nostr aren't going to be built out in a day. It's going to take time.
The amount of potential investor calls that have had to start with trying to rewind their brain because they've already invested in a crypto fund is so damn high. And for better or for worse, I mean, you freaks know, we try and call it how it is. So like, I just straight up tell them, I was like, look, I think you got scammed. That's probably a horrible investment. You're probably going to lose most of your money. And it turns out they don't usually invest after you tell them that. But I think after a few years, when that reality actually plays out, they're like, you were right. And then they come back to the Bitcoin table. That's the hope. But usually they don't take it quite well.
No. And there's a ton of confused people out there. There was another, it's probably on 1031's page, but that was another thing. Somebody was tweeting their quarterly statement from a liquid token crypto fund.
It was sold. It was Joe McCann's fund.
It was down like, he was down like 12 million.
80%.
Yeah.
Yeah.
I mean, this one individual's account was down $12 million.
But I mean, just to show that the repercussions for this type of thing. I mean, there might be investor lawsuits that emerge from this, but the social repercussions for this type of thing aren't that significant. I saw Laura Shin, who, by the way, Laura, you've been operating in the space for a while. I know you don't want to hold Bitcoin because you think it's a conflict of interest. Just start staying humble and stacking sats. It's insane that you don't have any Bitcoin.
She doesn't hold Bitcoin?
No, it's like her big thing is she doesn't want to have a conflict of interest.
Could you imagine? She's been in since like 2015.
Earlier than that. Absolutely insane. But anyway, she reported that Joe, who I believe is one of the GPs of one of the guys who's running that Soul fund that got wrecked, is launching a Soul treasury play with $1.5 billion behind it. So there's just Imagine like they drive your funds into the fucking ground and then they go and do the next thing.
And that's, I mean, how do they do this? How, like,
it's also tiresome.
how do these people not get blacklisted? Like,
it's fucking insane.
Yeah, pull up the Soul Big Brain tweet.
Oh my god. Wait, no. Read the actual tweet first. It's a good tweet.
I'm never investing into a liquid crypto fund again. How the fuck am I down 10 million through the first half of the year? These people are putting insane amounts of capital into these funds too.
That would go such a long way in the Bitcoin ecosystem. There's just not that much money in the Bitcoin ecosystem.
Yeah.
Such a big disconnect.
Yeah. It is astonishing. Are we wrong, brother?
No, it's just a grind.
No,
and it's the harder path. It's the harder path. But at least we'll be able to look our kids in the eyes.
Yeah.
I mean, besides the YouTube clickbait, I'm going to have to explain how.
No. I've already told my boys. I'm like, hey, listen, this is the extent of the grifting I'm willing to step into. This YouTube.
I'm gonna tell my boys that it was Uncle Marty's fault.
You can. I'll take. I mean, we have receipts. When we first started clickbaiting, I said, "Hey, we're gonna try something new. I know we both don't like it, but it has worked. We've been getting more views on YouTube."
Dude, it's horrible. I hate it. Fuck YouTube. Let's just delete the channel.
Yeah. Sociopathic, narcissistic charisma followed by victim folks who haven't healed or can recognize being gaslit. Yeah.
How do we feel about the Coke announcement? I'm actually very excited for cane sugar returning to Coca-Cola. We're the only real country in the world that puts high fructose corn syrup in everything. It's one of the original government psyops. So let's just get rid of high fructose corn syrup. Coca-Cola will still be bad for you. But
yeah, I probably have
no more corn subsidies, and let's get back to real sugar and no seed oils.
Yeah, I think I have maybe one Coke a year, if that. And if I do, I make sure I find a Mexican Coke because they've been making it with cane sugar the whole time.
There's Liquid Death has been doing like 2 grams of sugar, and they use agave nectar, which is pretty great. But yeah, my kids will not be allowed to have corporate soda or like big soda. It's insane how much sugar's in that shit.
I know. We treated our boys to a Sprite earlier this week, and it was like a bad decision. They're with their grandparents now. And my mother-in-law called us last night. She's like, "Why are they asking for Sprite?" We gave them one.
It's a fucking drug, man. Particularly and the high fructose corn syrup is so bad. But anyway, don't let that news distract you from the Epstein cover-up by Trump.
Yeah,
seems like he's throwing everything at the wall.
Let's go over this. I'm getting attacked both on Twitter and on Blosstr for saying that I won't call out Trump for the Epstein stuff. I did that last week, number one. Number two, did you see the video going around of the Epstein what would you call it?
It was an interrogation, right?
Yeah, interrogation. Yeah, he pled the fifth when asked if he.
No, he pled more than the fifth. What is it? The fifth, the fourth, the 16th, or something?
Yeah.
What are those other ones?
The fourth is unreasonable search and seizure.
Yeah. What was the teen one? I mean,
was it 16th or?
It was 14th or 16th. I don't know. That was pretty bad. They asked him. They asked him if he knew Trump, and he like kind of dipped around the question, and then he was like, "Yes, we're friends." And then he was like, "Did you ever hang out with underage girls with Trump?" And then he pleaded 3 amendments. The crazier thing is supposedly there's like 15 hours of footage with Bannon and Epstein, Bannon interviewing Epstein that hasn't been released.
Yeah. I'm telling you, I want it on the record now. It is very suspicious. Just the whole the way Trump is approaching this is.
And then did you see him post? He posted the AI video of Obama getting arrested in the Oval Office.
Well, that's that's where. This is where it's like confusing because like two things can be right at the same time. Like Trump could have, it may very well have been partying with Epstein with underage women.
No, he definitely was partying with Epstein. I don't know if there's concrete evidence. No, there's like video. He had him at Mar-a-Lago with like the Bills cheerleaders and stuff. Like those weren't proven to be underage, but they were just young girls and like 4 guys.
Yeah, and that's the big question. Like, is there blackmail videos of Trump doing bad stuff with young girls? Yet to be determined. Would not shock me either way. No, yes. We should dig into that, find out. The whole Obama, like, Russiagate thing, like, both things can be true. Like, Trump could have been doing that.
Yeah, 100%.
Russiagate,
but
collusion, definitely, like, high treason should be treated with, like, the utmost severity.
I mean, yes. But once again, he posted an AI video of Obama getting arrested on his official Truth Social account.
I didn't see that.
Which is go to I'll find the clip. It's a fucking insane clip. And honestly, AI is getting really good. Like he posted it with no comment. But all of this said, like the timing is impeccable. Like he went to Tulsi and told Tulsi, call the previous administration treasonous traitors because I'm getting destroyed on the Epstein side. It's 100% what happened.
100%. Completely agree. It's just like, I mean, the Epstein stuff, they're trying to sweep under the rug, and I'm very happy to see that people are not letting it get swept under the rug.
And there's definitely a bunch of Democratic elites, the big one being Clinton, who are tied up in all of this stuff too. Like that, I think goes without saying. But they also didn't run on releasing the shit. They kind of ran on covering it all up. So they were at least like kind of consistent.
Yeah. Can you do 1.5 speed on Primal?
I think so.
Let me check.
Why?
Because you're talking about like AI generated videos. Like, it is crazy. Shout out to Ed, Elijah Finley, and our team at Opportunity Costs. Like, they put this together in a week.
You can just play that whole thing. It doesn't have to be at
but it like
1.5 speed. I know what you're talking about.
Our money became worthless, and it cost me everything.
For a long time, cowries were stable currency here in West Africa. You could buy food, cloth, or even livestock with just a pouch.
European traders realized they could collect these shells for almost nothing and ship them to Africa to use for money.
When shells started arriving by the thousands, they stopped being scarce and they began losing value.
They used these shells to buy people, human beings exchanged for crates of shells.
Over the next 200 years, the amount of shells pouring in exploded.
Each one lost value. What used to cost a handful now took tens of thousands.
To pay soaring prices, war bands planned deeper raids to capture more people.
Shells bought guns, cloth, and alcohol, and the only way to get more shells was to sell more slaves.
By the mid-1700s, shells were so common they spilled onto beaches like trash.
In 1807, Britain banned the transatlantic slave trade and began seizing slave ships.
Shells suddenly had no purpose. The demand vanished overnight.
And with it, the currency that fueled it for centuries died too.
Today, the currency is still called the cedi, named after the shell, but its history carries a warning.
When money is no longer scarce, it stops being trusted, it loses value, and eventually it becomes destructive.
When money is broken and it loses its value, human life will be devalued inevitably.
Pretty heavy. Ed heard me talk about Safedin referencing glass beads in the West African slave trade in the Bitcoin Standard, and he sort of did some research and he wanted to go make a video about it. So it took him a week to make that. I think it cost us $50 in credits, and it's pretty insane. It's not perfect, but I brought it up because Winsome
It's
Hacks
really
AO3, and that's what we used. It was insane.
Yeah, and supposedly, I mean, so that's Google's video generation AI, which was a massive step improvement, and they're supposedly about to update it again, which would be a bigger improvement. I do think it's funny, and so I wasn't laughing at the content. I do think it's funny that VO is like obsessed with the selfie style video, because I fucking hate it. Like I just like
It's not Veo.
so ridiculous.
It's not Veo that's obsessed with that. It's like
They
that's part
prompt
of like,
that.
No, we prompted that, and I actually told Ed, I'm like, this is gonna get old fast. Like, let's get more creative with the.
It's because that's what the internet likes, right?
Yeah, yeah.
But it's like, I mean, so let's look at the one Trump posted. So Trump didn't post a selfie style one. I think this. I'm fading even the real videos that have selfie style. It's like, bro, like vlog style. Yeah, as John said. Okay, let's watch this one.
No one, especially the president, is above the law.
No one is above the law.
No one is above the law.
No one is above the law.
Nobody is above the law.
No one is above the law.
Nobody is above the law.
No one 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 is above the law.
Oh, son of a bitch.
What a timeline
Like,
we live in.
Fucking crazy timeline.
Yeah. And that's like another thing with this like Epstein sweeping on the rug, like going after Obama. Did you see yesterday? Like the representative came out, like we're gonna release the alien information next week too. There's flooding the zone with a bunch of distractions.
Yeah, they're like anything that sticks. There's like no strategy behind it. It's just literally, like you said, flooding the zone. To me, like I think the Bannon tapes would be really fascinating, and it's interesting that he's holding them back.
Yeah, because what was he doing? Doing a documentary about him or something like that?
He has like 15 hours of interview footage that were never released with Epstein while he was alive.
Yeah. I think I'm becoming. I think I've said this before. Like as I become more of a father every day. I guess 2 children, third on the way. It's all a big show, and I think that's one thing we've been very clear about over the last 7 years is like both sides of the political aisle, at least, are either working together or doing nefarious things in their own way.
Yeah, I mean, I think at least historically, most of the really insidious stuff has been collaboration. But that has changed a little bit over the last. Feels like things are accelerating. Feels like everything's accelerating.
It really is. And that's like going back to like Veo 3 and like this video. It's crazy what you can do for very cheap. As things get crazier too, we are in a mimetic war. In an information war, info war, if you will. And these tools are double-edged swords. Like they can be used against you or you can leverage them to enter the information war, the meme war, if you will, and push back with good messaging. That's what we're going to lean into. And I think we need to do more of that. Don't be afraid of it. Don't put your head in the sand. Like, engage.
I do wonder what like the actual breakdown is going to be between like AI slop and non-slop. Like, I don't know how that plays out. I don't pretend to know how that plays out. But like one post that I saw that went viral this week is this guy who's making like a couple $1,000s a week. And he just asked the AI, what are the top 100 products being sold on Amazon currently? And then he asked the AI to create review videos for the top 100 products. And then he just auto posts them to YouTube with his ref link. And he's just making thousands of dollars in completely useless shit. And I mean, it's just like a DDoS on our lives, right? It's just like fucking time thieves.
I mean, you're seeing it on X too. Like this whole, there's a bunch of new Bitcoin influencers. They're coming and gaining followers quickly by just like AI slot post threads. Back in our day, we used to have to manually write the threads.
I do like that. One of the benefits I had by deleting my X account is that they can't train their slop on my decade of content.
Yeah.
They can obviously train it on the new shit I'm posting on Nostr, but not the previous shit.
Yeah.
Back in our day, Marty, people used to actually read through your archives and then manually reword them and then press post. But now that they can just automate that shit. I think, yeah, I mean, there's going to be a lot of slop, and I think we're going to have to figure out ways for people who actually value their time to wade through it to get to the signal. I mean, that's like a key focus we have building out Primal, because Nostr won't inherently fix this. Like, people think like, oh, there's less spam, there's less slop on Nostr than X or YouTube or whatever. And that's just a product right now of lack of adoption. It's just less people. It's like if you have the only ride or dies using it, there's going to be effectively less. But I think at the core, the ability to give users choice, having open algorithms that are choosable, and you can use no algorithms, these types of things will help mitigate it. Webs of trust, verifiable reputations, all this stuff helps mitigate it by giving users more agency, but it doesn't automatically solve it, and it definitely doesn't completely solve it. And most people will probably just be products of the machine. So like social media brain rot is accelerating at a rapid pace. I think we've hit escape velocity. And I think the focus for the optimist out there, the focus has to be on, the 5-10% that want agency, that want to live their lives in a more free way, that want to take control over their time, that don't want to be data slaves. Because the unfortunate reality is that the majority are just going to plug into the matrix.
Yeah. I need an accountability buddy for this. I got pissed at myself this morning because I woke up and scrolled for a half an hour when I have a book on my desk here in the office, which is steps away from my bed, that I should have been reading. I should have been spending my morning not looking at blue light, scrolling. I have this book that I started reading yesterday that I should be reading. I should wake up instead of spending 30 minutes doom scrolling. I should just walk downstairs to my office, picked up this book, and exerted my energy in a better way.
And you could tell because you're never satisfied afterwards.
Yeah. Accountability buddy. I need you every Thursday to ask me if I doom scrolled or read a book.
Are you intentionally not saying accountability?
It's
accountability buddy.
Accountability buddy is a buddy that keeps you accountable.
Well, I've actually pulled back, Marty, because I felt like I was too hard on for you for a while, but do better.
Thank you. I need that. I need step on the gas. I need more peer pressure. All right, we've got a list.
Actual list.
Yeah.
Pretty big news. Like an hour in.
Yeah, we're like an hour in almost. Just getting to just getting into
The
the
dashboard.
list. We opened with this. Well, what is the show named? First Bitcoin company in the S&P 500, and that is Block. Got added to the S&P 500 earlier this week. The Fortune article is paywalled, but I'm sure you all know.
Oh, weird! It wasn't for me.
Big step for. I probably opened too many this month, but I have my VPN on, so it shouldn't.
No, this is not you. Oh, yeah, Logan can see it.
I can't read it.
I mean, yeah, you don't have to read it. Look, first of all, huge shout out to Dorsey and his team. They've been mission focused on building up Block. Block has been quietly turned into this massive Bitcoin juggernaut, and not in the like leveraged Bitcoin equity way that MSTR and the copycats have done. They have Bitcoin on their balance sheet. They stack profits to their balance sheet. But they've just been slowly turning the whole business into effectively this Bitcoin operating business and infrastructure play. They obviously have Cash App for buying and selling Bitcoin. They have their Lightning service provider for providing liquidity to Lightning Network. They have their hardware division that's making BitKey and working on mining and bringing more competition to the ASIC space. They recently just started rolling out Bitcoin payments to Square merchants. So they're like sneakily the largest Bitcoin company in the world in terms of if you exclude the treasury businesses, right? Like MSTR's market cap is significantly larger than theirs. But I think it's important to make a distinction between the two types of businesses. They're definitely very much different. The other interesting piece here is I believe this is the first time that a single person has brought two companies into the S&P 500 with Twitter and Block, specifically where he was the CEO in both situations, which is really fucking impressive. So huge shout to him. I think it's a nice little credibility boost for Bitcoin. Obviously entering the quote unquote 500 top companies in the world as rated by the S&P. And I do think it's kind of ironic because there's just been so much speculation on when MSTR will be added, and Block just kind of got quietly added first.
Yeah. Shout out to Jack and team. And we talked about it after their presentation, after Miles's presentation in Vegas this year, but I would not sleep on Block. It seems like they've been in a very big organizational restructure over the last 4 or 5 years. And I think Miles's presentation was like hey, we're ready to run. You mentioned they're beginning to roll out Bitcoin at their Square merchants, being able to receive and hold Bitcoin as a business via that system. And hopefully we begin to see them launching a lot more products and make it easier for people to spend and receive Bitcoin as they go about their everyday life. Also this week, Block wrote a letter. It wasn't an amicus brief. Or was it just a recommendation letter about Bitcoin as freedom, day-to-day spending money?
De minimis cap gains exemptions. So the idea that if you spend, amounts less than $600 or whatever, a certain threshold that's low, you shouldn't have to have the mental burden and the capital gains financial burden to do that. It's holding Bitcoin back, at least in America. I think that's very true, specifically the mental burden. I think it's almost not even the cost. People just like overwhelmed and scared by it. And so they tend to not spend Bitcoin when they could otherwise. I do think another big piece, though, is actually the infrastructure of having stores accept and want Bitcoin, which I think why that Square piece is super interesting. For the people that are wondering, where they can go shop with Square merchants, I think they're testing it out right now. I don't think the locations are public, but they said that they're going to post to btcmap.org and then also integrate that map with non-Square merchants that accept Bitcoin into their apps. I saw Miles Suter post that. I mean, also huge shout out to Miles. He's been mission focused on Bitcoin over there for a while. My original understanding is that this will soon become the default for all Square merchants. So if you just see one of those white POSs, they accept Bitcoin, and the merchant by default will just convert to dollars So the merchant has to choose if they want to hold the Bitcoin, which I think is the right trade-off balance, because defaults matter, and we can't force merchants to hold Bitcoin. That would be unethical. But we can add the capability for them to receive Bitcoin seamlessly and frictionlessly, so we can spend it where we want to.
Yeah, if I recall correctly, the rollout to all Square merchants happens in 2026, Q1 2026. So,
I mean, I think it's all up in the air. I think they're hitting this test phase way earlier than expected.
Yeah. I mean, on this note too, it's the fact that they've been included in the S&P 500. It reminds me of many conversations I've had with Parker throughout the years. He likes to use companies with Bitcoin on the balance sheet in the S&P 500 as a broader indicator for where we are in terms of Bitcoin adoption. So now we have Tesla. There's one other, now Block, obviously. I believe there's one other in the Fortune 500. So you got 3 out of 500. That's what, 0.6% global adoption is where we are for Bitcoin right now. That's how Parker's doing it. So like as more of these companies...
What is it?
0.6%. 60 basis points of global adoption. Still in the early phase, if you're using that indicator.
I mean, I like the indicator that Bitcoin adoption is early until the majority of people are earning Bitcoin, not buying Bitcoin, and spending Bitcoin, not selling Bitcoin, which is probably more of a philosophical indicator, because I don't know how you measure that. But we're very, very far away from that right now. We're not even close.
It's still early. It's still early.
I want to see, I mean, we've talked about this too. It's like the treasury companies are one thing. But like, I want to see like actual, I want to see actual like cash flow positive businesses stacking profits to their balance sheet. I think is another big, but that's also like hard to quantify exactly. But I mean, you see companies like Apple that are incredibly profitable, that hold tons of cash. Like when a company like that or a company like Meta or something is converting a portion of their cash reserves and their cash flow into Bitcoin, I think that's a fundamental shift in how corporations see Bitcoin. And we're seeing that on like the private side much more. I mean, like, and it's not just Bitcoin startups like Strike or something, but like dentist office and shit.
Yeah. Figma, good signal. Very profitable. 10% of their cash and cash equivalents in Bitcoin. Good to see. Logan, pull it up. Building on this theme of like adoption, where we are, and particularly the mindset of, for lack of a better term, the normies thinking they're late. These are my former coworkers at Barstool Sports who I
Dude, this is a crazy clip.
Times. But this is, I mean, and this is not, again, it's for lack of a better term. Part of my take, most popular sports podcast in the world. This is like how the normies are still approaching Bitcoin.
Wait. Definitely speed this one up because it's long. Do like
this
1.5x.
I'm just gonna bring this back right now. You think, because Saquon Barkley saying that if he could go back in time, he would like to get paid all in Bitcoin. That has gone up 7x since he started in the NFL. You think?
No, duh.
He basically was like, yeah, I would have rather gotten paid 7 times the amount.
I wonder if the Giants had offered him the contract that they were offering him, but in Bitcoin, if he would have taken that.
Do you guys have any Bitcoin? I'm
heavily leveraged in Doge.
I think I bought a half a Bitcoin in like 2016. I don't know how to get it.
I got the Doge. It's in a wallet somewhere.
I buy a little bit every month.
Yeah.
I have like an automatic.
Do you?
Yeah.
Good for you. That's the way
impressive.
You're supposed to do it, Hank.
Impressive.
Shout out to my brother.
That's actually really impressive.
Hank's the richest guy at
How did you do that?
My brother told me to set it up.
Teach me how you did that.
Well,
that's so smart.
I don't know how to do any of that stuff.
Yeah,
that's
pretty
sick.
good. That's a really smart thing you did.
Damn,
that might be the smartest thing you've ever done.
My brother's a smart guy.
Yeah.
This was like 4 years ago at Christmas.
He was just
that's
like
sick.
A little bit of Bitcoin every single month. Because I do the thing where if it goes up, I'm like, can't buy it now. And then if it drops, I'm like, oh, I got to buy all of it right now, which you're not supposed to do.
Oh, I do. If it goes up, I'm like, I missed it. If it goes down, this is the end of Bitcoin.
Yeah.
That's what I think.
Yeah.
So my bottom line is I just never buy it. I did have a guy in 2012 tell me, you should buy this Bitcoin stuff, and it was like $80, and I bought some energy stock that went to zero.
There's some stories about that. There was like a guy
in 2016 in our office. Like,
yeah,
I remember losing. I used to make fun of losing Caleb so much because Caleb like didn't have a lot of money and put all of it in Bitcoin, and then would be like, I have no money, and I would always give him shit. And then 6 years later, he's like, yeah, That worked out.
I feel like Doge is going to take Bitcoin over at some point.
I saw
Quiggs has the best story here.
Oh yeah, he got paid, right?
No, he
He
used to.
has a hard drive or
He used to use Bitcoin to pay for fake IDs, like back in like high school, and he had like an extra like $100 that was just like left over in the account, and it's worth like millions now, but he just can't get back on.
Oh, he's got to get someone to help him.
It was in like high school. It was like because that was like the easiest way. It was like the only untraceable way to like use the dark web, and it's just out there.
I would think about that all day, every single day. Like I would just sit in a room thinking to myself, one of these moments, I'm just going to remember the password.
Dude, there's a guy who recently, I think it was like a few days ago, sold all his Bitcoin that he bought. He bought $54,000 of Bitcoin in 2011. What do you think it sold for?
1.2 bill.
9.6 billion.
Jesus. Why did he just sell now?
I don't know. He better be buying a team.
Yeah. Like, can you imagine not selling once you hit $1 billion?
It's crazy. And also, why would you sell all of it?
I'd probably sell when it was like 100,000.
Why wouldn't you sell like half of it and keep half of it?
Yeah.
He probably did. He probably has more. But that's
when we
missed the boat. We missed the boat, boys. We screwed the pooch on the Bitcoin thing.
Not Hank. Hank's fucking swimming in it.
Yeah, but imagine if you could just go back in 2010 and just be like, hey, do you have like $1,000 laying around because in 15 years it's going to be 100 million.
This is the mindset. They think they're late. Everybody thinks they're late.
Always.
Quiggs, if you're listening, there's got to be somebody who can brute force the password to that wall.
No, I mean it's one of those bullshit stories. Like it's probably wasn't self-custody. Like maybe he was holding it on Silk Road. Maybe he wasn't holding it. Maybe the year he's getting wrong. Like how many stories do you hear like that?
A ton.
He's not getting that Bitcoin.
It's not late though. Any part of my take listeners who stumbled into this podcast, it's not late. I DM'd Big Cat last night. I was like, dude, please start buying. Just do what Hank's doing. Buy every week. He said, I will.
I mean, if you do on strike, if you do auto DCA, so if you just auto stack sats and you can set it to hourly, daily, or weekly, it's no fee. And then when you hit a certain threshold, go to self-custody. You can also do that for no fee if you're willing to wait a little bit. The 24-hour withdrawal is also a free withdrawal. So it's never been easier to start just automating stacking. People just have to actually take agency and make it happen.
Yeah. Well, speaking of normies, the normies of this cycle in Bitcoin land are the Treasury Co. Enthusiast, if you will. It seems like people are not happy with Michael Saylor and MicroStrategy right now because the stock is not screaming as it stands today. They launched another preferred stock offering, stretch. They're calling it STRC. This is supposed to be they're marketing as like the least risky yield offering that they have, preferred stock offering that they have. So it's for low yield, low risk investors who just want to get a return on a preferred stock offering or a yield product that it's not trying to outcompete or outperform higher risk alternatives. And despite that, MicroStrategy is only up 18% in the last 3 months. And the what are they called? The strategy. What's the X community? MSTR.
Irresponsibly long MSTR. So first of all,
they're not happy.
Let's pull up this chart. Can you zoom in on this chart? This is the most important chart in MSTR, and it's MSTR priced in Bitcoin. So in my mind, if you're buying MSTR, you're either buying it for two reasons, or I guess three reasons. You're either buying it because some influencer told you it's too difficult to self-custody Bitcoin and you're taking the easy way, which I think is a poor reason to do it. And you should learn how to do self-custody. It's never been easier. Just make it happen. Your family will prosper. Or you're buying it to outperform or which is the story that we hear a lot, which is there's institutions that can't buy actual Bitcoin, so they buy MSTR instead. I think recently we've seen a lot of retail focus, so I kind of question that narrative a little bit, but it's definitely a key part of the shareholder base of MSTR. And then the last reason, which I think is the real reason that unites all three, is that you're expecting it to outperform Bitcoin, and you're buying it because you think it will perform better than Bitcoin. So with that said,
You think you're late, you're trying to play catch up. This is the mentality of
Yeah,
a lot of these people.
or not even late. You're just greedy and you want to take additional risk to try and outperform Bitcoin, which is fine. Like that's what investments are, right? It's taking additional risk to try and have higher upside. So with that said, like this is the chart to watch because this chart is MSTR priced in Bitcoin. Just like you should price the rest of your life in Bitcoin, and Marty created an extension to make it easy to do that. So should you price MSTR in Bitcoin. And I think it's a fascinating chart because what you see is before he implemented his Bitcoin strategy, the stock was literally just trending to zero in Bitcoin terms. He effectively stemmed the tide. And now it seems like it's on the up after a decade of downturn. And then if you go to the next chart, Logan, it's zoomed in on the year. Like the year it's not easy to outperform Bitcoin. The year performance is quite good. And I think it's hilarious how restless MSTR shareholders are. Strictly speaking, they're pretty upset with him that he keeps selling common stock to buy Bitcoin, which is keeping the common stock price down. But if you look at the chart, like I think it's performing pretty admirably against Bitcoin. It outperformed it significantly from October to December, and then it's kind of been flat since then, as he's been in hardcore accumulation mode. I believe he went up from like 300. He almost doubled. I think he over doubled the Bitcoin stack from a little under 300,000 to 600,000 in that time period. So to maintain kind of flat against Bitcoin during that is pretty impressive. But these preferreds, I mean, I think people are kind of sleeping on this preferred strategy. I mean, like Saylor's creating this yield curve backed by Bitcoin that's controlled by his corporation. There seems like there'll be heavy demand for it. I think he'll probably transition to selling that over the commons and let the commons start running hard and accruing value in like the medium term to long term. Like that's the plan, but he needs time for these new products. And he just released this new one, STRC, which the big difference for this one is that it pays out its dividend monthly, and he's intentionally saying he's going to try and keep it stable around $100, while his other dividend yielding preferreds are paying out quarterly. I think the demand will get there, and as the demand gets there, he'll start selling them more. But he needs them to have more time in the market before he just starts, selling at scale over there. And he's also probably feeling the Bitcoin FOMO and just wants more Bitcoin before the rest of the world catches on.
Yeah, Casa Murphy in the YouTube comments said it well. Stretch targets money market type pools of capital. It's designed to be a stable dollar instrument with a yield attached, and those are large pools of capital. And to the point that you mentioned, and this is something I've been beating the drum about for like the last 6 months to a year, is I don't think people really understand the sort of significance of creating a forward-looking yield curve on Bitcoin. I think what Saylor and the team at Strategy are doing with these different products is beginning to give you a glimpse of what that looks like. And this forward-looking duration / yield curve is extremely important. I think in MicroStrategy is doing it in this way. What we're seeing at Battery Finance with their dual collateralized structured credit products with 10, 15-year durations, like this is one of the unlocks for different pools of capital to get certainty that Bitcoin is here to stay and that volatility is going to fall moving forward. Because if you have a forward-looking yield curve, you can basically say, all right, I have certainty that there's a good chance that this amount of Bitcoin is going to be locked up in these products for this amount of time. And therefore, they're not going to be sellers on the market, most likely outside of some unforeseen extreme event that forces them to sell. And in terms of the confidence that this will give more people to step into Bitcoin because they're not worried about 80% drawdowns, 90% drawdowns. There will be more drawdowns, but stuff like this really, I think, depresses them in the long run and suppresses volatility.
Yeah, I mean, I think adoption suppresses volatility.
Yeah, and this is a form
I think
of adoption,
I think it's important to realize that among the leveraged Bitcoin equities, there's MSTR and then there's everything else. And it's hard to comment on them as a basket. Like you really have to separate it out. Because MSTR is just so far ahead. And especially with these preferred shares, it's just like an absolute juggernaut. It's been de-risked in a lot of ways. But that said, having like an overhang of a single entity that controls a significant amount of Bitcoin kind of brings in a certain amount of volatility itself. This is something that we've seen for years with like people saying like, oh, what if Satoshi sells this coin, right? Well, MSTR is quickly getting the story has always been, well, Satoshi disappeared and those coins have never moved and he might be dead. Well, MSTR is nearing Satoshi level stack of 1 million Bitcoin and is very much alive and has shareholder meetings and conferences. So I think that introduced a different level of kind of volatility. I do have the next chart, pull up the next chart to Marty's super cycle comment. I think this chart is a fascinating chart, which is the 200-week moving average, made famous by the Mayer multiple that uses it as well. And if you look at the 200-week moving average, which is like, let's blend out day-to-day volatility from Bitcoin and just do the average over the last 200-day prices. Some could argue that we've been in just a long, protracted bull market for the entirety of Bitcoin. Like it literally just never goes down. And so what the Mayer multiple always said was you buy when it's below and you sell when it gets too high above. But this chart specific, and I think people should just blindly stay humble and stack sats relentlessly. I think that's just an easier path to take than try and trade these markets. But it is interesting when you look at previous cycles on this heat map with the 200-week. So like if you look at like the 2017 cycle, it was actually like pretty long and pronounced before it kind of hit blow off top territory. And if you just like do like visual cues on the current cycle, like we're clearly nowhere near blow off top territory yet. Like Bitcoin's likely to go much higher. But that doesn't mean there won't be a blow off top and another drawdown. And maybe that starts to look something like that 2017 thing, but just a little bit stretched out on the time scale.
And just doing the squint math, if we do a 2017 like pump, how many lines did that go up? 2017. It went up like, it went up like 1.25. So if we do that from here, we get to like $1.8 million. You heard it here first. Blow off top, 1.8 million.
Well, I'm not going to make any price predictions, but
I'm kidding.
I do think long-term Bitcoin is designed to pump forever, so you should just stay humble and stack sats about it. I see some comments about like seed signer versus cold card in the live chat, and I do want people to use more self-custody in general. So I think it's a valuable topic to bring up over and over again because it's just a constant conversation. If you go to odell.xyz, it's my personal website with all my links. It also has recommendations. Under hardware wallets, I have 3 recommendations. I have Cold Card is strictly my favorite, and it's the one I used myself for my family and my organizations. I think it has outstanding multi-sig support. I love the multiple secure elements. CoinKite is obviously a sponsor of the show. We are also at 1031 the exclusive investor in CoinKite. It's just us and the 2 founders. It's a profitable bootstrapped business that 1031 is very proud to help accelerate its growth and be able to offer more products on the market. I have BitKey there if you want the easy path, and I have Seed Signer there for the do-it-yourself path. And I think this is key, right? Because I think there's no one-size-fits-all in Bitcoin self-custody. The best tool for you depends on your threat model, use case, and technical competence. I think, unfortunately, there's a lot of people in the space that change their recommendations based on who pays them more. I think we've been very consistent that that is not the case with us. And the fact that I recommend both Seed Signer and BitKey on my personal website when I get 0 financial compensation from them is proof of that alone, I think, but also the long track record. The biggest complaint people have about Cold Card is that it's not completely free and open source. That is true. It used to be. Then a different hardware manufacturer took their code, modified it, and raised VC money when CoinKite never did before. So they changed their license to restrict people from selling their code. So you can modify it yourself, you can verify it yourself, you can download it, you can do all the things that open source is great for, except for modify it and then sell it. On the bright side, that's probably the only reason 1031 was able to invest in CoinKite in the first place. So grateful for that aspect. But I think if you're actually able to buy a device, I think Cold Card's best in class. And I think it's a recommendation that I'm very comfortable with, because I only want to recommend the best to people that are storing their life savings in it. I think it's a very sacred recommendation. It's not one that people should be making willy-nilly. But if you don't want to buy a device from a corporation, if you can't access devices from corporations, maybe you're in a part of the world where you just can't buy it and get it shipped to you. Maybe you have a threat model where even if someone knew you had Bitcoin, your government would be going after you or whatnot. Then the fact that we have a project out there that you could do it yourself, and it's not just Seed Signer, there's also another project called Crux, are extremely important. I think it's important that people actually discuss the trade-offs without gaslighting each side. There shouldn't really be sides, and I think both are very guilty of this. Like I have, MVK is a close friend of mine, and I think he could argue in good faith better, but I think the Seed Signer troll mafia is also like pretty bad about arguing in bad faith and scaring the shit out of people who want to self-custody. And you're just scaring them into MSTR and ETFs and whatnot. You're not actually being very productive with it. The biggest difference from a functionality point of view is Seed Signer chooses not to have secure elements in it. You keep the seed separately and you scan it in usually as a QR code, which means that you have to secure that seed very well, because if someone gets access to that seed and if you use a passphrase, you're a little bit more secure. They have access to your funds. While Cold Card tries to be kind of like a Fort Knox in a device. If someone gets access to your Cold Card, they have to actually break the secure elements or guess your PIN within 13 entries to get access to your stash. And that means you can keep your seed somewhere far away and very secure, rather than like on your desk or in your office because you need access to spend it. So anyway, there's my deep analysis of the current self-custody situation. But once again, odell.xyz, I have recommendations to all my favorite tools and guides and devices. And Marty left the chat. I don't know where he went. I don't know what he's doing.
Took the opportunity to take a quick pee. That
Nice.
was going to be a long one. Happy you addressed it. I didn't think you were going to feed the trolls, but
I don't think that was like the most productive. If that was feeding the trolls, that was like the most productive practice ever. So thank you, troll.
Yeah, I like the Q. I like the Q. Matt's an MK4 maximalist. I like the Q.
The Q, I definitely think the Q is easier to use too. Specifically if you want to use it on mobile with the Cove wallet, which is iOS only right now, but should release on Android soon. But it makes it very, very, very easy to use with QR codes in an iPhone.
Yeah, it really does. What do we got next on the list? We've got the Human Rights Foundation. Story of the week.
I see. One sec. Sorry. This is not a troll. Weird Robot is saying Q is quite an investment for many people, though. It's about $250, which is insane because you can spend $250 and have better security than most nation states or Sailor, which is, I think, a crazy asymmetry there. But I respect that people might think that's very expensive. I also just want to add that we heard it on Part of My Take about the Bitcoin whale that had $8 billion that moved. And once again, I think we addressed it last week. We don't know if he necessarily sold it. There's actually a decent argument that it's being used to fund one of these Bitcoin treasury plays. And maybe that's why we didn't see as much market impact as one might expect. So we don't know from chain data if he sold it. There's a good chance that maybe Galaxy Digital is being used as the regulated custodian for a Bitcoin treasury play. But that $8 billion whale was keeping his Bitcoin on a hot wallet, a single sig hot wallet generated in 2011 on an internet connected computer with Bitcoin QT, now called Bitcoin Core, on it. And I think there's this ridiculous thing going on in the Bitcoin space where it's like, if you're not using geographically distributed multisig, you should hold MSTR. If $250 is too much of a percentage of your Bitcoin stack, just hold it single sig in a like a warmish wallet. Like, that's probably fine. You will probably be fine. We don't see many compromises if you use a high quality wallet. You have a fresh computer, you don't watch porn on it, you have Sparrow Wallet, and you generate those keys and you write down the seed somewhere securely until you have enough money to justify $250 for Fort Knox level security, or better than Fort Knox level security, because who knows if there's even gold in it. I think it's like a relatively reasonable trade-off.
Yeah, it is. Pull it up. I mean, the algo must have been listening, because I just got fed an MVK tweet. Nothing to do with hardware wallets, but I thought interesting to highlight the value prop of Bitcoin. Bought this property a year ago for $1.5 million. Just got this assessment from the county for the 2025-2026 tax year. You've got to be kidding me. Value. Bought it for $1.5 million last year. Now it's being assessed at $3.7 million. And so he's got to pay property taxes on a value that is more than double what he paid for 2 years ago, which is like one of the very big downfalls of owning real estate and property over Bitcoin, is it comes with a property tax, which shouldn't exist. You actually don't own it. That's what MVK calls out here. Land is a scam. You don't own it. You rent it from the current violence monopoly. Buy Bitcoin instead.
Yeah, I mean, taxes are a scam. They should just print the money and fund the government that way.
Yeah. That's insane, though. They can just, like, somebody can come assess your land, mark it up, and it's like, oh.
Well, you have major jurisdictional risk as one of the main issues with real estate as an investment. I mean, there's many issues of real estate as an investment, and we've talked about that at length. But I mean, at the end of the day, once again, you can't raise a family in a Bitcoin. So you have to weigh the trade-offs on different jurisdictions and make the right decision for your family on what jurisdiction you think is best, because there is a massive divide between jurisdictions in terms of property rights.
Yeah. But in terms of Mitch responded to the MVK there, it's like an unrealized gains tax. Like, if
it's 100% an unrealized gains tax, yeah. But I like, there's a lot of nuance there, right? I mean, I think just saying straight up like you're renting it from the government is like it depends on which government and how they treat their residents. I think there are small towns in America that have relatively low, reasonable property taxes that fund, local infrastructure that they couldn't fund otherwise, and that there's actually buy-in from the community for that infrastructure. So you can go both directions with it.
Yeah.
I mean, like, once again, the excuse that's always used, right, is like the fire department. But like, it's used as an excuse because it's real. Like, if your family lives somewhere, it's nice to have a funded fire department.
Agreed there. There's got to be another way to fund it outside of arbitrarily increasing the value of your property year on year and then charging more property tax on a value that you haven't realized yet.
But there's extremes, right? Like in New York, like state and city property taxes are fucking insane. But if you live in like a small town of 1,000 people, and that small town is taking a small amount of property tax that is like with the consent of the residents, because the local mayor or whatever is not going to fucking get reelected if he's crazy about it, then that's a completely different conversation than large city, state, and federal property taxes.
Agreed. Logan, pull up the next one. I actually did want to talk about this. I'm happy Zero Hedge posted this, but for you freaks that are unaware, PJM, which is the Mid-Atlantic grid system, which I currently operate in, has seen prices skyrocket in recent days up to around $340 a megawatt hour, which is like, it's like 34 cents a kilowatt hour we're paying in this grid system right now. Highlights the need for expansive energy generate, like the expansion of energy generation in grids throughout the country, not only here in PJM, but also hilarious that a lot of this is likely being driven by AI, demand from AI data centers. And I just wanted to highlight that it is incredibly poetic that Silicon Valley, which was some of the leading voices of the ESG narrative, and particularly attacking Bitcoin mining for using too much energy, and trying to force, not trying to force, they would never be able to force, but really deriding Bitcoin for being proof of work and trying to get it to move to proof of stake. Now you don't hear anything about energy use. I mean, obviously they want more.
You hear the opposite.
Yeah.
Now they're pretending they were always for more energy production and energy use because their fucking data centers need it for AI stuff.
Yeah.
It's complete, what is it? Not double speak.
Gaslighting.
They rewrote history. It's like 1984.
Yeah. We've always been pro energy.
But anyway, it's good to see, like, at least we're now aligned with big tech. When the incentives flip, that's like the most powerful thing ever. So we got that going for us.
I mean,
more energy production, more efficient energy production, and greater energy production leads to human flourishing. And we need more of it in this country and everywhere, because we do have a global show. But as I'm becoming a parent, I'm like becoming more and more America focused, because that's what matters most for me. So deal with it.
America. We have our problems, but I think relatively it's a good place to live. The Human Rights Foundation Financial Freedom Report story of the week is coming out of Hungary, which enacts repressive digital asset law. Hungary, under Prime Minister Viktor Orbán's increasingly authoritarian rule, passed one of the strictest digital asset legislations in Europe. Starting July 1st, individuals trading digital assets on unauthorized platforms could face prison sentences of up to 5 years, and providing unauthorized crypto asset exchange services could land you in up to 8 years in prison. This legislation's broad language and lack of implementation guidelines have created a legal gray area where previously legal activities could now result in criminal prosecution. Forbes reports digital asset exchange Revolut has already halted services for its 2 million Hungarian users, temporarily freezing accounts with no timeline for restoring services. The legislation is problematic because it criminalizes basic financial activities such as buying and selling Bitcoin while not providing a legal or compliant way to do so. It limits individuals from storing value outside traditional banking. It also eliminates an option for people who might use Bitcoin to protect their savings, support dissenting causes, or escape financial surveillance. For more stories like this and others, make sure you sign up for the Financial Freedom Report at financialfreedomreport.org. Hungary, Orbán, based Orbán, really turning the screws there. People want to use Bitcoin.
I mean, not very surprising news, but this once again was why self-custody is incredibly important, and all the open source tools around using Bitcoin in a freedom-oriented way are absolutely imperative for the robustness for the entire system, but also for the end users that rely on them as freedom technology.
Yeah. Unfortunate to see. You'd think like these countries would embrace it. Like they'd want their...
No, what they do is the dictator, that's the cool part of the incentive structure of Bitcoin, is the dictator embraces it. Like Orbán probably has a fucking stack, but he doesn't want his people to use it. It benefits both the ostracized dictator and the oppressed citizenry.
Is he considered a dictator?
I think so.
Is Viktor Orbán...
Are you asking Grok? Grok, is this true?
I'm asking Perplexity.
God.
Viktor Orbán is widely described by political scientists, international observers, and some Western media as an authoritarian or dictatorial leader, though he does not fit the classical definition of a dictator in the sense of abolishing elections or openly ruling by decree. Orbán's tenure in Hungary's prime minister has been the systematic erosion of democratic institutions, media freedom.
And they do like fake elections.
Yeah.
Fake elections are so hot right now. It's the way better path.
Yeah. They tried to do one in 2016. Obama would be getting arrested for it.
I saw the video of him getting arrested.
Yeah. Didn't have this on the list, but important to bring up since we did cover it, and there was some ambiguity or uncertainty about whether or not it would be included. The Senate Banking Committee released its Responsible Financial Innovation Act of 2025 earlier this week, offering a distinctive alternative to the House-passed Clarity Act. And the Senate version includes the Blockchain Regulatory Certain Act, I believe. The most notable provision is the Blockchain Regulatory Certain Act section, which explicitly protects non-controlling developers from money transmission licensing requirements. This addresses a critical concern by ensuring developers who create or maintain distributed ledger software without controlling user funds aren't swept into state-by-state licensing regimes. With the Tornado Cash and Samurai Wallet cases ongoing, clarifying this issue is overdue. We were pleased to see Section 110 of the Clarity Act remain intact and hope to see this section survives the Senate debates. So it has gotten included in the Clarity Act. Shout out to Zoomer Zach for sending out an email from BPI 3 minutes ago, which I just read that from. So the guys at BPI and many others in the industry really put the pressure on the Senate to include this. It is included. Obviously not the final bill, hasn't been passed, hasn't been signed into law. So this is extremely important to make sure that it stays in the bill if it is going to get passed and signed into law, because this is very important that developers are able to write software and distribute software and publish software without having to fear about getting thrown in a cage because people use that software, do it in a way that the government doesn't like.
Yeah, this is specifically the Clarity Act, right?
Yep.
And I mean, look, I think at the end of the day, if you want to see, if you want to see the next great century of American dominance, like this has to be a core piece, whether that's on the Bitcoin side or on the AI side. Protecting open source developers, making America the best place to build open source projects, and bring the best talent in the world here to do it. Because at the end of the day, so many of our friends, I've seen it firsthand over the last year and a half. I mean, the Samurai developers are still being charged right now. The Tornado Cash developers are still being charged right now. They're going through their cases. They're getting the book thrown at them. And so many of our friends I've seen firsthand, they have families themselves and they work on open source projects and they're scared shitless and they don't know where to live. They don't even know if they should travel to the US if they're not American citizens, let alone move here. America should be the place that is unequivocally the best place to live and build open source software, period. That will just lead to flourishing in the society in a massive way.
Yeah, and there it is, that framing I think is very important too, because I mean the 1031 ex social media intern tweeted out earlier this week, we exist because we decided that instead of complaining about A16Z, it's probably best just to compete with them. And when you think about the influence that the tech right has in DC right now, and you couple that with where a lot of their capital in our space is allocated, it is towards these closed source Orwellian systems, WorldCoin being one of them.
So yeah, I can't believe like fucking $135 million allocated to scanning poor people's eyes with the WorldCoin project from some of the biggest funds in the space. Like, and Marty and I, yeah, go on.
Are they just making fun of us? Like, there's like, is this like a big joke? Like, just like the first sentence, to meet increasing demand for Orb verified world IDs. Like, do they not?
Yeah, I know the intern was pretty proud of which section he screenshotted, but yes, they are laughing at us, and a lot of times they do make a lot of money off of it. And what I was going to say is, me and you have spent a decade plus complaining about this practice, And it's unfortunately, it's not that effective. Complaining is a dopamine hit. You feel like you're doing something, but it's really tricking you into complacency. And the real way we make these people irrelevant is we outperform them and we outcompete them. And we make it clear to them that their investors are getting fleeced and making the world a worse place at the same time. And so if you can make the world better while being more profitable, that's just a winning tandem right there. And I think it becomes more and more obvious as the proof of work is put in.
Yeah. Speaking of that proof of work building, we started the episode talking about Base, Zora, and the decentralized name-only systems that companies that are backed by the investors that are supporting or verified world IDs are building. We have Nostr as a competitor, and Blosstr just launched an easy video mirroring application. So you can easily take YouTube and X videos, paste the link, and have it mirrored automatically to Nostr. It's leveraging the Blossom sort of media caching system.
Protocol. Yeah, so there's a couple of things here. First of all, let's fade the naming scheme that just ends stir at the end of things. I hate it.
Terrible name.
You can build on Nostr without permission, so you can name it whatever you want, and I will still appreciate people building on open source permissionless protocols. So we will still cover it on Nostr, but I mean on RHR, but I reserve the right to shit on you for a bad name. The second piece is Blossom. Blossom is an incredibly cool open protocol that allows you to easily verify that media hasn't been modified. So it hasn't been faked after the source gets released. And then the second piece is that it makes it very easily to mirror. So like many people can keep copies of these videos and they haven't been changed among the copies. So it adds a censorship resistance element to it through just easy mirroring, many servers holding it. You as an individual, for instance, could download all rabbit hole recaps that are posted at primal.net/RHR or all dispatches that are posted at primal.net/Citadel. You can keep it on your own offline hard drive, and someone in 10 years can confirm that those copies that you have are the same ones that were signed by the original accounts and published by the original accounts and weren't modified, which is massive. The third piece, the third takeaway here is there's this weird back and forth within the Nostr community about cross-posting stuff from big tech socials. And we actually there's two different things. There's if you're posting content to big tech socials, you're 100% part of the problem. And it's a trade-off balance, right? Because you want more users, more people are on big tech socials. Like X has 700 million users. Meta has 5 billion users. TikTok has 1.8 billion users, and Nostr probably has 100,000 users, right? So there's a trade-off balance there, but you are providing content and you're providing data and you are part of that cogwheel, that system. That's not the case if you're cross-posting, if you're pulling stuff that's going viral other places and providing it to Nostr. You're actually helping bootstrap the Nostr ecosystem in that situation. So if you see stuff that's interesting or relevant on other socials that you're actually paying attention to anyway, then it behooves you to go and cross-post them over to Nostr. It makes Nostr more useful. It means that you could use Nostr only and still see important shit that is happening other places. So making more tools available that make that easier, I think, is a win. And then you have this beautiful incentive where if someone's creating something interesting on TikTok or X and you're cross-posting it to Nostr and getting zaps for their shit, then they have an incentive to come over and post it directly on Nostr because they're leaving zaps on the table. They're leaving generational wealth on the table and not getting Bitcoin for it.
Yeah, it's funny that there's controversy around this, particularly after Nostriga last year, because having attended that event and listened to a lot of the talks and discussion outside of the stages, it was we need to create all these content bridges, whether it's Blue Sky, Mastodon. And we need as much content as possible, not only to make it easier to go Nostr only, but if you're trying to compete with XAI and other large language models, and you want to be able to pull from an open source
Yep.
corpus of data. The more data in the form of content, the better.
Well, the thing is like, yeah, the dream would be like automatic bridging stuff, but all these closed systems intentionally are putting up bigger and bigger walls that make that more difficult. So the result is what we really need is people doing it on an individual manual basis because they can't stop that. And there's a threshold there. There's a threshold where it's like, you don't need to have all the users to have all the good content, because if you just have 5% of users and they're actively cross-posting good shit and bringing it over to Nostr, then you see everything that's relevant, and then from there we can bootstrap further.
Yeah, there is some interesting social dynamics. I think Gigi brought this up, or it might have been Pablo when we were in Riga last year. Is that like there's one that I follow, I'm trying to find it. It's like Nostr News. It's just like cross post, but it doesn't get a lot of zaps. It's flooding. Is this it? No, that's not it. Let me see if I can find one. They haven't posted in a little bit, but it is interesting. I found cross posting. Here it is, Nostr News Network. It's got 2 zaps, but just like shared Joy Bar just said that the view is being canceled. We only have one more show after this.
Well, I think a lot of it is like also formatting. If it's the bot that I'm thinking about, does it have like a bunch of ugly formatting attached to it?
Here, let me see. I'll put it in here, Logan. It is like, I think the point I'm getting at, like to get zapped and what I think you're getting at too, you need to put effort into it. It's just like,
yeah,
these guys are literally just scraping breaking headlines and videos and putting it on automatically.
Oh yeah, so there's Nostr News Network and Flash that are like, they take viral tweets and then they repost them onto Nostr, and I think they provide decent value for people.
I like them. I just noticed they don't get a lot of zaps.
I think the bigger issue is that there's too much. Like there needs to be a little bit more curation there. And they can do as they wish, but that's why it's less useful for me. Like there's just a lot of garbage. And then there's also just a lot of breaking news shit is garbage on X to begin with. And if you just blindly copy what's viral on X, 9 times out of 10, it will just be fucking trash. So like you have to actually put a human touch to it. I mean, I see one comment in here that is about Fidelity applying to be in-kind redemptions for the Fidelity BTC ETF, which is, I believe, the 3rd largest Bitcoin ETF. But one, like, there's a key element, and that's important, right? Because people should be able to actually withdraw Bitcoin from the ETFs rather than sell them for dollars and then have to pay cap gains tax. It adds too much friction to actually moving to self-custody as your stack grows in size. If you have in-kind redemptions, it's great because it means that if you're buying an ETF, there's actually a top of funnel flow that ends with you in self-custody and using Bitcoin in a freedom-oriented way, which it would be pretty badass and would be a pretty big unlock. But there's breaking news tweets that were saying, first of all, that this is already live, which is just not the fucking case. Like the SEC needs to approve the changes. So hopefully we'll see it in a few months. And then the second piece is there was a bunch of like caps breaking news tweets that were saying we're doing higher top line numbers for how much is in the Bitcoin and how much is in their ETF. Like I saw one that was saying $10 trillion. And the entire Bitcoin market cap isn't even that high. So if you just blindly, my point is, if you're just blindly pulling viral tweets, you're going to have a lot of trash there. And I think people value curation and value actually you trying to save them time. And because time is the most scarce thing. And also last piece there, by the way, is a lot of the new people don't realize that my all caps was commentary on these breaking news caps things. So definitely don't group me in there. But it is what it is. The algos love the caps.
I think we all need to appreciate how dynamic Matt is as an artist, as a social media artist. Being just using the all caps function as a social commentary in and of itself, not even the content of the words that were written in all caps, just the form factor of being in all caps as a commentary itself. It's a beautiful thing.
Thank you, Marty. Appreciate it.
That is, I mean, you brought it up to Fidelity. It's amending its filings to get in-kind redemptions, but it does need to be approved. Would be massive.
Yeah.
And it's an interesting, like, we've talked about this in the past with like Bitwise using part of their revenue from the ETFs that they launched to contribute to open source developers as being like sort of like a competitive feature that they incorporate to attract investors to their particular ETF. I think this is a bigger sort of draw in-kind redemptions.
I mean, did Bitwise also apply for in-kind?
I think it was BlackRock, actually.
Yeah, I mean, I think ideally you have multiple layers of differentiation, and I would like to see more open source support. I mean, the other thing Bitwise championed was they were the only ones posting actual on-chain addresses for proof of reserves. And the market just didn't seem to appreciate it, particularly after Saylor's comment saying proof of reserves was actually a liability and a security concern, which is disappointing. Like when you have that kind of platform, words really matter. Yeah. And it results in a step backwards because, strictly speaking, if you are already publicly stating how much Bitcoin you own, actually showing on-chain proof of the Bitcoin adds no security concern.
No, but you got to touch the keys. That's a security concern.
Yeah, I mean, you got to touch the keys regardless. I mean, look, I think obviously it'd be nice to have signed messages that say you actually own the keys. But like what Metaplanet's doing and El Salvador's doing, where they're not even posting signed messages, they're just saying these are our addresses, is a huge step forward. Like that's a huge improvement. And in that situation, that commentary actually is not relevant either because you're not touching additional keys. You're just saying these are our addresses.
Yeah. But what if they take the public addresses and try to reverse engineer and brute force the private key?
The public addresses are on the blockchain and they could take them from there because they have large amounts of Bitcoin in them. But also, I know Marty's being facetious, but it's a good learning experience. And that is just not technically possible right now. There's some argument that might be possible with quantum computers in the future. But I do not think that is a short-term concern. I don't even think it's a medium-term concern. And I think there'll be decent momentum that if it starts to become a bigger concern, we'll have quantum resistant addresses that people can opt into. To be clear, that might be around the time that I start making mempool bets again, because those signatures are much larger than the current addresses.
Ethan Hellman, have we pulled this up yet? I think I've pulled this up before. Yeah, because I've searched it. But for anybody who hasn't, Logan put this in the show notes. It's still theoretical right now, but this was back in April. Ethan Hellman took to the Bitcoin Dev mailing list, and he thinks if he can figure out some unknown or sort of some variables that haven't been solved for yet, you can create post-quantum resistant addresses that would actually have smaller on-chain footprints in terms of the amount of data they use, and it would also solve the ordinals and JPEG problem that exists.
Did he say how? Because that sounds unlikely.
He's going is exactly my intent. I'm not presenting so much as a solution as we might want to do this at some point. What are the problems that we can solve for them? If it turns out to be the case, post-quantum schemes need more on-chain size but have lower per byte computation cost, a reasonable argument can be made that the higher discount factor for PQ data is acceptable.
Yeah, so they'd still be physically larger.
Trade-off.
He would just have
Less.
the protocol discount them.
Yeah. I was focused on size because computation is pretty great for most post-quantum signature schemes. Post-quantum signatures are far cheaper to validate per byte, and according to BIP360, Falcon is cheaper than ECDSA per signature verification.
I mean,
the point
and
being is like the
yeah,
post-quantum fear is like we're going to go to this address structure and it's going to bloat the chain and it's going to prevent Bitcoin from being sufficiently decentralized because nobody can run nodes. And I think this solution is like, well, you can have more data, but if it takes less computation, like bandwidth's the big problem. And as long as that's solved for, it can be sufficiently distributed.
Well, no, I mean, I think, first of all, everything has trade-offs, and people pretending that things don't have trade-offs is part of the issue with having any kind of substantive debate in the first place. But I mean, the block size limit itself prevents this. You would just have less transactions per block. I think there's an argument to increase the block size alongside of it, which will probably never happen. One of the most compelling arguments, which is interesting, is from Adam Back, which is if we added confidential transactions, we could actually tolerate a higher block size limit because the biggest issue with the block size limit is minor centralization, and the biggest issue with minor centralization is individual transaction protocol level censorship. And so if you didn't know which transactions to censor, you could actually tolerate a bigger block size. And I mean, I don't think we'll see confidential transactions on Bitcoin, so it's kind of a moot point. But it's just an interesting thought process in terms of everything has trade-offs, and you kind of have to balance all the trade-offs together and think about it in a holistic sense. The last piece I would add here is, since the block size wars, we had years of pretty strong consensus and stakeholder alignment in terms of people that rely on Bitcoin being stakeholders, not like people staking Bitcoin, because that doesn't exist because we're a proof of work system and not some shitcoin that has implemented proof of stake. We're seeing that alignment fade as the Bitcoin ownership base broadens out, right? It's hard for some cypherpunk open source developer to be aligned with Saylor, but that's by design. That's Bitcoin growing up and maturing. Like, that's just what it is. As a result, consensus for soft forks will be much harder to achieve. I think something like Quantum or some of these like maintenance type soft forks, we can get through the line. But I think there might actually be a lot more relevance here going forward in the fact that anyone can hard fork without permission. And then the market can compete on which chain going forward is the one that's more valuable. And anyone before that that's holding self-custody has Bitcoin on both sides of that fork. And they can choose, or they can just sit it out. And no matter which way we go, we're good. It's surprising to me that we haven't seen any new hard fork attempts with decent momentum. I think that might change going forward. And this is just me preemptively saying, don't panic in that situation. You can just sit tight as long as you're self-custodying. Because if you're not self-custodying, the custodian chooses for you. And in this dynamic with ETFs and the MSTRs of the world, that dynamic becomes kind of really interesting, and it should at least keep the space more fun to be in as that proceeds.
I mean, on that note too, because like when you compare what you're describing to 2017, this is actually an interesting thought experiment. Because in 2017, Bcash, it was a hard fork where you had people on both sides adamantly sort of for Bitcoin Cash or Bitcoin, and most Bitcoiners who knew that Bitcoin Cash was bullshit just immediately split their private key, dumped their Bcash, bought more Bitcoin. But in the scenario you're describing, like if we wanted to test out some sort of new path and do, would you describe it as like an amicable hard fork or?
Well, no. So, I mean, by design, there's nothing amicable about a hard fork because there's a split in the community, which is why it's soft fork hasn't been agreed to in the first place. But with Bcash, like there was no real organic support for Bitcoin Cash. It was by far minority supported thing. They had none of the really talented core contributors working on it. Like there was none of the wizards and Wizards has been ruined now because of the fucking shitcoiners, but none of like the really talented cryptographers or Bitcoin contributors were backing it. They had like they had the B team, they had like the AAA team or whatever. Like I could imagine a situation where you had like actually like really strong support for a change that could be implemented as a hard fork. And that would be an interesting dynamic to see play out. Because once again, like you don't need, by design, you don't need consensus for that. That is just like me and Marty could ship a hard fork right now. 99% of people would never use it and it would be irrelevant and would churn to zero. And we would get some reputation hit on it for trying to scam people into a minority hard fork. But the point stands that literally anyone can do it. And so just a breaking change to existing Bitcoin. The history stays the same. And then going forward, you have two different chains that are competing against each other with one presumably trending to zero. I think in every hard fork situation, there'll be a clear winner over a certain period of time. And then the other one will just trend to zero in terms of the other one.
But like this stemmed from the quantum discussion. I'm trying to think through like if there was a hard fork revolving around quantum resistant address structures, and most people basically didn't split their private keys and dump one side or the other. They basically just let it hard fork and then started sending and receiving maybe to themselves with the new address structure to see if it works. Then you have people try to attack it.
Well, yeah, you could see a situation where, let's say a subset of the Bitcoin community, like 20% of the Bitcoin community, thinks we're 3 months away from a cryptographically relevant quantum computer that can break keys. And the rest of the community doesn't think that's the case and doesn't support a change to Bitcoin. And so the community the group that believes that ships a hard fork that has quantum resistant signatures. And they both live side by side for maybe 3, 6, 9 months, 12 months. And then keys get broken. And this is like highly theoretical, right? But keys get broken on one side. And so you could see a change be implemented in that kind of fashion with something
in that interim, you have like hash rate split, price differentials,
market trading against each other.
Yeah.
People freaking out on each other on socials.
It's pure
super vitriolic.
Pure out economic war on chain.
Global protocol warfare.
Yeah. Like as long as you hold, I mean this is very, I haven't said this name in a while, but like Daniel Krawietz, his whole thing was like hold all the forks, have the superposition.
Yeah. But then he lost his mind and got wrecked.
I think he lost his mind before that. But in this case, like I don't think you have to adopt like the Daniel Krawietz, like Bitcoin should fork as much as possible and you should hold all the forks. It's like if it does fork for what you deem to be somewhat legitimate reasons, quantum resistant address structure being one of them, like the best thing is just hold Bitcoin on both chains.
Yeah, I mean the conservative move is just hold on both, almost always. If you want to take a little bit of risk, then you can get a boost on your stack size if you pick the right side. And with the Bitcoin Cash, it was quite obvious. So I think that risk was reduced, and because of some of the players on the Bitcoin Cash side, the benefit you got for selling and taking the risk was actually quite significant. I mean, it was trading at one point because of Coinbase's negligence. It was trading even higher than that. I was like, you could get like 0.4 Bitcoin for like Bitcoin Cash, and now it's on a Tuesday night because of Coinbase.
Yeah.
So like those types of situations will present themselves. I think for a while it was trading at like the 0.2, 0.3 point where you could get like 20 to 30% more Bitcoin if you took the risk. But my point is I don't think that's the end of the world. I think we'll probably see more of that, not less of that, as the Bitcoin community kind of broadens and matures and isn't necessarily as in sync and aligned with each other. And to me, that is one of the biggest elements of my conviction in Bitcoin, is that as long as I hold my piece of this ledger, my percent of this ledger in my Bitcoin stack, in a worst case scenario, hard forks can happen, and you can get these changes through if they absolutely need to happen. And the hard part is you can't really measure that ahead of time. There's no way to objectively measure how many people will actually support a change until after it happens. And that's why soft forks have always been kind of a thing that can happen in best case scenarios, where you have a pretty good idea of what the consensus will be, because if you don't and you implement a soft fork, you get a chain split afterwards anyway, and you have a more chaotic chain split in that situation because people weren't expecting it.
Yeah, then what they would have to like revert to an earlier version.
We've just never seen, we haven't seen that happen in modern Bitcoin yet. We haven't seen a soft fork where people thought there was consensus and then had a chain split after it was implemented.
Yeah. Do you think
I think it'd be quite chaotic. I don't think we'd see a rollback in that situation. I think we'd have what affected, you
wouldn't have a
technically speaking isn't a hard fork, but you'd have the same result.
Yeah.
With more chaos, because you wouldn't have, like, technically, if you were doing a hard fork and you wanted to try and do it in the most responsible way, you would be very, very open about it. You would set like some kind of future date that you were going to do it. You'd be say like, in 1 year or 2 years, we're going to do this thing. Here's the code. You can start running it now. You can start verifying it now. There's no funny business that's happening where we're adding supply or airdropping ourselves or adding KYC. Like, there's been KYC forks where, like, if you don't apply to the KYC, you don't get access. So you would do it in a very open, structured, forward way. And that's strictly different than trying to push through a soft fork that doesn't actually have consensus, that in a chaos moment has a chain split, and then the whole community is on the back feet trying to react.
Yeah, honestly, now you bring this up, we should probably test this out with the Unix timestamping bug, because that's like universal, needs to happen.
Yep.
Like a block height 980,000, or maybe after the next halving, we have some time for the.
You can go even further. You can do like a 5 year, 10 years. So like there's like 10 versions of node software out before, because that's the other concern. Like, the biggest concern about a hard fork is, the nice thing about a soft fork is you can be running older software and not update and still be in consensus. So if there's a bug in new software, the whole network doesn't go down because people who are running old software are still good. But if you do some crazy forward date, then you can kind of mitigate that concern a little bit, because you'll have years of software releases that are all compatible with it before it happens.
Shout out to Stop and Decrypt. Man, we're getting real. I love when we get into the technical weeds, reminiscing, because
this is a fun shit.
Yeah. Stop and Decrypt. I mean, he's been a big advocate of this. Like, let's put a future Unix timestamping bug hard fork flag in a version ASAP because of this problem that you just described. Like, if you do it like a year or two before you actually need to, and people are still running old versions of the software, you're going to have a chain split, and it's not going to be good. Do you think any of the incredibly long MSTR X community understands any of these dynamics?
I think there are very few people. Like, I'm not even like, it's unfair to shit on them specifically. The truth of the matter is like, people can do ridiculous top line numbers of like 200 million Bitcoiners or whatever. But the amount of Bitcoiners that, first of all, self-custody is a significantly lower amount than that. I think is probably less than 250,000 people. And like the amount of like talented cryptographers we have in Bitcoin is like under 10. And then everything else is in between there. There's like hundreds of us that are relatively technically competent. There's just not that many people. This system is a movement to, like, ultimately it's a software project, but it's a movement of individuals, and we need to get all those numbers up across the board. And it's part of the reason why OpenSats is so focused on developer education, because you need that number up. if you want it to actually be robust and reduce that human risk, you need to get that number up.
Yeah. No, part of me wonders too, like 2017, 8 years ago now at this point, like, do we need one of these like every decade just to like refresh people's memory or introduce people to how these sort of social and consensus dynamics actually work in the real world? Because imagine if
One of
we
what?
go, what was that?
You would say we need one of what?
Like a controversy with like a hard fork, just to like make sure like a new generation of Bitcoiners understands the consensus dynamics. The
I mean, I think
ossifier
it
says no, but
I think it kind of happens naturally. But like, I mean, I think a good comparison that you could have is before BlockFi and FTX blew up, a lot of people were saying, if you were reply guying me specifically, saying when I was saying not your keys, not your coins, self custody or bust, they were saying that was FUD, and we were matured past that, and we're past that point. And then many of them learned their lessons, and we've seen self custody usage increase substantially. And that was about 3 years ago. And we're starting to see it again already. Like people are like, oh, self custody is way more risky than owning an ETF or MSTR in your Schwab account. And once again, both of those models have trade-offs. Like to just say flat out that it's more risky, I think is malice or just incompetence. And you probably need a reminder. Do you see the comment from Stanley?
Being a reminder. Are you humble enough? Are you?
You got to stay humble. You got to stay humble enough.
Yeah.
I don't pretend to be humble.
Chevy, come on, brother.
I just need to remind myself.
Yeah, Chevy in the chat. I do appreciate Fidelity adding in-kind redemption for the ETF. Chevy, you missed earlier. They just amended their filings. They're waiting for approval, so we need the SEC to approve the in-kind redemptions.
The funniest part about the Eternal September stuff is that we've just been doing this for years, so it's like everything's just inundated with like inside jokes and shit that they'll just never understand. And like one microcosm of that was like when I was on Mallers' show, I said stay humble, stack sats, and the chat was like, why is this guy just repeating things other influencers say? It's like, okay, bro. And it just is what it is. It's just Eternal September. Like that's a good thing. Hopefully we just constantly get new users who just don't know their history.
You got to become bigger than the meme. That's when it actually becomes a meme, when the creator gets lost in the
I think it's already happened, and it's wonderful. There's plenty of people that have attempted to trademark and monetize stacking sats, but I was never one of them because it belongs to the people.
It does.
It's a lifestyle.
Go get your stacking sats at tftcmerch.io.
Yeah, fuck you, Marty. I do not get a cut of that for what it's worth. But fortunately, I really like Marty's sons have become family to me, so I'm happy to help fund their future lifestyle choices.
I haven't got my Humble Enough hat, by the way. Did you mail it?
I shipped it to you.
You did?
Did you not? You really didn't get it? I'll check on it.
Did you send it snail mail?
I sent it regular tracking mail. I'll check. I'll check for you.
I gotta follow up on that. Maybe in a box somewhere. This has been great.
I sent it the day you asked for it.
Before we hit record, we're like, short list. Maybe we'll get an hour in, and here we are, 2 hours and 15 minutes later.
Well, we have a good time. You gotta. Life's too short to not have a little bit of fun.
Yeah.
Well, I got nothing else. It's a good rip.
I got nothing. That was a great rip. We don't have any boosts to read from Podcasting 2.0. No 21,000 sat boost. Zap.stream was down, so this was just pure free alpha this week for you guys.
That's the worst part of it. I love the Nostro live stream. We'll get it. We're gonna get it to a more stable spot, freaks. I'm pretty excited about it.
Did you hear Hulk Hulk Hogan died during the episode. This is we lost the Hulk.
Dude, and Ozzy
went out the way you would expect Ozzy to go out. He had like a final farewell
pretty
concert,
baller.
and then died
Largest charity, the largest charity concert in history. Performs at it in a chair, but performs at it, and then dies a few weeks later is just like that's some impressive shit.
Generals gather in their masses. Dun-dun. War Pig's my favorite Ozzy song. Crazy Train was big when we were in like middle school. It was like too big. War Pigs is my go-to. Black Sabbath song. The Hulkster, though.
Marty, can you send me your address for this hat so I can check my records?
I had to remember which one I asked you to send it to.
Well, just send me the one you want me to send it to currently.
All right, I will.
I'll just send you another hat. I'll just send you another hat.
All right, it's been great. Enjoy your weekend. Everybody else listening, enjoy your weekend. Touch some grass. Don't wake up and doom scroll. I'm speaking to myself right now. Wake up and pick up a book or get outside. It's my goal for tomorrow.
Life's too short, guys. Time is scarce. Love you all. Stay humble, sex hats.
Peace and love.